You are listening to ChartingWealth.com's weekly review and forecast for the week beginning the 6th of June, 2016. We'll go through all of our stock charts, both on the weekly and the daily. Then we'll jump right into the news that moved the market over the last week and the events that may be moving it in the coming week. Let's jump right in on the weekly chart. We're going to start with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It tracks the whole market. Well, the whole market started going up, actually crossed over on our MACD back on the 4th of March. It actually started going up all the way back on the week ending the 19th of February, after, if you recall, the beginning of the year was really down. The market just rolled over and started hammering down for that first week ending the 8th of January. And then the market rolled over and started moving up, as we said, around the 19th of February, crossed over on our MACD and our derivative oscillator, always a strong sign when they both cross at the same time, going up on the week ending the 4th of March. And we have seen the market move up until it shuttered a little bit around the 29th of March, April, then started moving down for 4 weeks. And on the 27th, the week ending the 27th of May, it started moving up, and it ended actually this last week on the 3rd of June. The market ended up another strong up week. We can see the derivative oscillator peaked out all the way back on the 1st of April, and since then has moved down. Actually, though, it posted up a little bit over the course of this past week, and we've seen our MACD continue to move up and diverge from the red signal line. Now, if we look at what happened throughout the course of the week, we can see on our daily chart, the week we had up movement on Monday the 31st, followed by Tuesday, if you recall, it was a short week. The market opened up on Tuesday the 31st. Then after the Memorial Day holiday, then a bit of a pullback on Wednesday, up on Thursday, a bit of a pullback on Friday. Market is currently above the 2-day trend line as far as the daily chart goes. Daily chart crossed over going up back on the 24th, and again has had some strong up moves since then. Have a little bit of weakening of the MACD and the signal line, and a weakening of the derivative oscillator. But again, up on Tuesday, down on Wednesday, up Thursday, down on Friday. Spinning tops on Wednesday and Friday, again showing indecision in the marketplace. We can also see that on Friday, the market never moved above those highs on Thursday. So that is where we are as far as our weekly and our daily charts go on the total market. And again, for those of you who are just joining us or haven't joined us for a while, again, this is the only time that we look at the weekly chart. We do it once a week. We want to make sure we know what the big, we call our double long trend, is doing. And it is moving up. All right, so we have an up pattern on that big chart. Now we're going to go to the S&P 500 as represented by the Spiders S&P 500 Trust Series Exchange Traded Fund. It looks very similar. Most of the time it looks similar to the total market. Why? Because the S&P 500 represents 500 big companies and a lot of volume in the market. It's not always the same, though. Last 2 weeks, up moves after the 4 prior down weeks of down moves. Again, not strong down moves. Why? Because we had up wicks on all 4 of the down moving candles. Now we'd actually had back on the week ending the 27th, a little bit of down movement on that candle. But the movement over the past week ending the 3rd of June shows strong up movements, a decent sized green open box candle with a wick on top, not a huge wick, but again a wick on top, showing more up movement that was not realized because the bears were able to pull that down. So again, we see the derivative oscillators grown a little bit, and there is a diverging between the red signal line and the blue MACD. Again, crossed over going up all the way back on the 4th of March. Let's look at the daily movement. It's probably going to look a lot similar to what we saw in IYY. It does. The down moves weren't nearly as big a down moves on the S&P 500, more like really spinning tops, almost dojis. up movement on Tuesday after the market opened at the Memorial Day weekend, then down on Wednesday, up on Thursday, down on Friday. Much further down, the bears were able to pull things on Friday, but the bulls were able to pull things up, derivative oscillator weakening, and the MACD and signal line converging closer. Again, not on, as far as the weekly chart goes, close to a crossing over, but again, you can always have huge down moves that'll pull that right over, but we don't see that happening at this point. Now, let's go ahead and go back to the weekly chart. We're going to take a look at the Qs. What is the Qs? That's the NASDAQ 100, the tech stocks. We can see that the Qs just switched over. No, I'm sorry, it switched over at the 50-period moving average line's confusing me. What happened is we switched over going up. We sort of bounced off the red signal line back on the 20th, the week ending the 20th, and switched over that week on ending the 27th. And then we see the week ending the 3rd of June, our past week, we actually flipped over to a positive on the derivative oscillator. And again, that's now paralleling the up move that we had occur during the week of the 27th on the MACD. So we have two strong weeks of up movement on the Qs, that is the NASDAQ 100, followed by two closed box green candles, which again are not as strong as the open box green candles we had starting on the 22nd of April. We had down moves occurring the week ending on the 22nd of April, then the 29th of April, then the 6th of May. Again, all 3 weeks down moves. Then the market sort of slid sideways, green open box candles the week ending the 13th of May and the 20th of May. Then the market started moving up positively, strongly for the QQQ or the NASDAQ 100. What do we see going on? And again, confirmed up moves on both derivative oscillator, and the big determinant of everything is the MACD, and that's been going on now for 2 weeks. If we look at the daily chart, what do we see going on? Well, we see that the market last week started moving up on Monday strongly. Then it really just slid sideways Tuesday, Wednesday, and Thursday. Actually, if anything, down moves, but the down movement never went below all the up movement that occurred on Tuesday, the first day the market was open after the Memorial Day holiday. So basically sliding sideways, has crossed over on the 2-day trend line, so it has broken that, but we don't have a crossover yet. Derivative oscillators losing energy, and the MACD is moving toward the signal line, but not close for a crossing at this point. But the Qs has weakened considerably as far as the daily chart goes, never got above the high from Tuesday throughout the course of the week. Lots of indecision showed on that doji on Friday. So that is where we are as far as the Qs go. Confirmed up move still on the big chart and still on the daily chart, but does appear that the daily is weakening, not being able to top over. For the record, IYY was down on Friday 0.32%, S&P 500 down 0.30% on Friday, and the Qs down 0.47% on Friday. Now we're going to go back to our weekly chart, and lastly, as far as our indexes go, before we get into the news, both last week and the coming week, we can see that gold was up 2.78%. It was up on the weekly chart. For the day on Friday. It was actually down for the week on the weekly chart. We see that gold crossed over going down on the week on the 27th, ending the 27th of May, and then down again for the week ending the 3rd of June. What's been going on with gold? Well, gold started moving up strongly after the market started crashing right at the beginning of the year. It moved up and really peaked out for the first time around the week ending the 11th of March. Then it slid sideways down a little bit and then peaked out again on the week ending the 6th of May. and slid sideways for 2 weeks. And then for the last 2 weeks, gold has been down. Strong down on the week ending the 27th of May, I'm sorry, and then again strong down the week ending the 3rd of June. So gold crossed over there on the 27th of May. So what do we have going on with gold as far as our daily charts? Because it's a confirmed down move, strong on the MACD and strong on the derivative oscillator. If we look at our daily chart, we see that gold had a strong down week until Friday, when gold zoomed up 2.78%. Now again, that's not reflected on our weekly chart. It is reflected on our weekly chart only in a bit of a blip. The daily chart shows a huge move up in gold on Friday. And we'll talk about, when we get into the news, the things that were occurring throughout the course of the week. But you can see that gold started up a little bit on Monday, down Tuesday and Wednesday, and then that huge bump up in gold on Friday. Again, gold is still, though, as far as our weekly chart, in a confirmed down move, although it lost a lot of that down movement. And our Hinken-Ashi type of candlesticks we use, again, help us see the average pace instead of just blips. If you will please go to chartingwealth.com, you'll be able to listen to that latest training that we've done on the Hinken-Ashi. That's spelled Heiken-Ashi. It's Japanese. It basically stands for average pace or average movement. We find that chart a whole lot more helpful when trying to track what's really going on in the markets, rather than just your standard candlesticks. And it does portray a bit of a different mood when you look at the market, because it's showing you the average pace, not just the blips. So that is where we have ended up our markets for the week, ending up there with gold with that big up move on Friday. Let's jump into the news and talk about what happened over the course of the last week that moved things. Well, we saw, as far as the U.S. goes, weak payrolls, as far as the positive news that had been coming out of the Fed attempting to build up their case in recent weeks for a summer rate hike. Friday's weak employment report may slow up the Federal Open Market Committee from being able to do that. Non-farm payrolls rose just 38,000 jobs in May, and the weak April report was revised lower by an additional 41,000 jobs. So although unemployment's dropped 4.7%, that's the lowest in the cycle, it fell mostly because participants simply dropped out of the labor force, not because people found jobs. Isn't it interesting? What did the British Prime Minister 100 plus years ago, Disraeli, say? He said, there's lies, damn lies, and then statistics. Well, we have statistics. Let's talk about Japan. They are delaying further their rate hike. Their prime minister announced that his government would delay a rate hike in Japan's general sales tax. That was scheduled for next year. He's going to delay that all the way until October of 2019. Japan just continues to struggle and have difficult times, and they attempt to tax and spend their way out of it. Do you think that'll ever work? No, it probably won't. Let's talk about growth. The Fed is saying in the Beige Book that they're looking at modest growth. They've set the economic stages for them to push ahead with their meeting later this month. They're describing growth across the U.S. as modest. However, you've got two districts, Chicago and Kansas City, where there's been a considerable slowing in economic growth. Let's also talk about what's going on with OPEC. Well, they left their meeting in Vienna without any agreement on production. So you're just going to continue to see OPEC flounder around with crude prices approaching $50 a barrel. They've seen the pressures ease on them, although there's still plenty of those countries that need to make a whole lot more than $50 a barrel in order to keep their head above water. Brazil continues to remain in a big recession. Now, don't forget, Brazil has the largest economy in Latin America, and their economy contracted by almost 5.5%, I think technically 5.4% in the first quarter of 2016. Very difficult for them. Remember, they're going to have the Olympics coming soon. You got the Zika virus, you got all sorts of things that are affecting Brazil. This is the longest running recession they've had since the 1930s. Tough down there. Also tough over in Greece. The Greeks, they just cannot meet the conditions being set by the International Monetary Fund, and the Europeans, they're just going to continue to flounder. China had a flash crash that they suffered this last week. They saw their CSI 300 index crash well over 12.5%. Then it recovered its losses in a single minute on Tuesday. So again, interesting things, not necessarily good things going on in China. We see the Organization for Economic Cooperation and Development. Of course, we hear them spiel that out as an acronym, the OECD, on the news all the time. They've lowered their forecast for global growth. Again, things not going that well in the world, regardless of what the Feds might say. Looks like we are having a lot of headwinds out there across the globe. U.S. auto sales dipped, home prices rose. Isn't it interesting? We literally judge our economy so much of the time now that we've gone from an industrial-based economy to a service economy on how home sales are going. Like somehow homes are creating lots of jobs for us. We have to have places to live, surely. But as far as increasing a nation's wealth, that's increased by production, by actually adding value to things. And we continue to talk about how home sales are going as a measure of how good our economy is going. Yes, buying and selling more homes can show that your production base is increasing because you have more money to spend. But if all you're doing is trading money around and not producing anything, again, doesn't bode well for the long term. The European Central Bank has left its rates unchanged. And now let's sort of, after we've gone over all of what's going on in the world, which is much more bad than good, let's talk about what we're going to see happening to us over the course of this next week. We're going to see that on Monday, Fed Chairman Janet Yellen is going to speak on monetary policy in Philadelphia. That is something for you to listen to, because when the Fed Chairman speaks, since it's the central bankers that control everything, it really matters what she says. And that matters a whole lot more than other numbers and other things that can pop out. So very, very much pay attention to what happens on Monday. Be cautious. She says bad things will happen in the market. Can very much translate into that unless it's already been accounted for. She says good things, you might see the market bump up. So be cautious on Monday. Let's talk about what else is going on. Eurozone Q1 GDP, gross domestic product, is going to be revised on Tuesday, the 7th of June. We're going to see on the 8th of June, that is Wednesday, China's going to report its trade figures. Of course, that can have some impact. Japan's GDP is going to also be released on Wednesday, the 8th. And then on Thursday, sort of the last event we have in the news, big time except for unexpected things, China will be reporting its consumer and producer price data. And again, super bad things in those areas with Japan, China, and the Eurozone, or super good can affect things. But overall, what you really have to pay attention to is what Yellen is going to be yelling on Monday. So hope that this report has been helpful to you. We always love to hear from you. You need training, you have questions, you want help in learning how to read these stock charts. That's what we're here for. All you have to do is go to chartingwealth.com, email us, follow us on Facebook, Twitter, Instagram, YouTube. If you don't already have our How to Read a Stock Chart video and the charting layout that we use at freestockcharts.com, all you have to do is go to Charting Wealth, sign up for our daily review and our weekly review and forecast. That's a one-time thing. Put in your first name, your email address. You'll get them every day. You'll also receive that link to the video, How to Read a Stock Chart, 15 minutes of fascinating information that help you figure out just what we're talking about every day. You become a stock charting master, you are well on your way to understanding what's going on. Even as a value investor, you never want to buy higher than you have to. You never want to sell at the wrong time. That's why reading a stock chart is so important. Thank you so much for being with us. We always love to hear from you. Hope you appreciate these reports. If you appreciate what we do, ask you to do one big thing for us. That's go to iTunes, give us a 5-star rating. We have 2 podcasts there, our weekly review and forecast. That's our video. We also have that same weekly review in audio in our daily audio broadcast on our audio podcast. Go to either or both. Give us a 5-star rating. Say something nice about us if you appreciate what we do. Thank you so much for being with us. We love to hear from you from chartingwealth.com.